Hello everyone, it's Arnaud Delapierre. Today, we're tackling a topic that many investors dream about. Warren Buffett and his masterful investment in Coca-Cola. How did he spot the right opportunity at the right time? And above all, why does this investment add so many zeros to his bank account? In this video, we will analyze each step of his reasoning. You are on a channel dedicated to decoding the most notable strategies to help you progress. Get comfortable, because we have quite a bit to share. Buffett, nicknamed the Oracle of Omaha, is renowned for his keen business sense and long-term approach. Before stepping into Coca-Cola, he had already built an empire with Berkshire Hathaway. His style, looking for undervalued companies with a strong brand capable of withstanding competition. When Coca-Cola was going through some turbulence towards the end of the 1980s, Buffett jumped at the opportunity. He saw a giant that maintained a vast network and an unparalleled brand image. This operation would change the trajectory of his portfolio for decades. Buffett's success often rests on three pillars. The first is patience. The second is thorough analysis and confidence in the strength of a company. With Coca-Cola, these parameters perfectly aligned with his philosophy. The brand enjoyed international recognition, a detail that reassures anyone interested in stocks. Then, despite the competition, Coca-Cola has always managed to innovate to retain its consumers. Finally, its distribution network and commercial relationships offered Buffett a perspective. Sustainable. He did not just buy a few shares, he increased his stake in a targeted manner over several years. A small aside for those who like to detect stock market opportunities, I highly recommend the Notrade app. Free on iOS and Android, it offers reliable trading signals to guide your decisions, all within an interface fluid. You will find alerts adjustable according to your own criteria and real-time tracking. It's a particularly interesting tool for those looking to manage their trading with confidence and efficiency. Feel free to try it and form your own opinion on this assistant. Now, let's continue on our topic, Warren Buffett and Coca-Cola. After spotting the potential of Coca-Cola, Buffett first invested about $1 billion in 1988. For the time, that was huge, especially for a single stock. But he didn't stop there. He continued buying until 1994, increasing his stake to several billion. Over the years, this investment became one of the most profitable in the entire Berkshire portfolio, Hathaway. The dividends were reinvested, contributing to the phenomenon of compound interest that literally inflated the value of his investment. This is a demonstration, perhaps masterful demonstration of what patience can bring in the long term. The strength of Coca-Cola lies not only in its iconic beverage, but also in a solid marketing strategy. For decades, the company has invested heavily in advertising and sponsoring international events. This constant presence has forged an emotional relationship with in the eyes of Buffett, it was a signal that the company would remain competitive, even in the face of changing trends in the beverage industry. Then, Coca-Cola's image aligned well with other Berkshire holdings, reinforcing a certain coherence in its portfolio. This clearly illustrates how Buffett's vision goes well beyond the accounting numbers. A major asset of Coca-Cola, in Buffett's eyes, lies in its dividend policy. Each year, the company distributes a portion of its profits to shareholders. It has done so continuously for several decades. Not only does this regular flow of dividends help to consolidate the investment's profitability, but it can be reinvested to acquire even more of shares. This mechanism, called compound interest, produces exponential gains in the long term. By choosing a company capable of generating stable profits and sharing its earnings, Buffett ensures an income reliable regardless of temporary fluctuations. Buffett likes to bet on sectors he knows well, favoring simplicity and understanding of the product. Coca-Cola fits perfectly into this pattern, a beverage recognized in almost every country and quickly accessible. So once again, the marketing strategy and the brand's ability to renew itself were assets visible for generations. All this reinforced Buffett in the idea that as long as there are people having thirst, Coca-Cola will have an audience. This logic may seem obvious, but it reflects Buffett's investment philosophy. Acquire stocks that are easy to understand and monitor over time. The Coca-Cola brand has spanned different eras and faced various competing advertising campaigns, yet it managed to remain present on the shelves of practically every supermarket. This stability results in consistent sales and an indispensable status in the minds of consumers. Soda enthusiasts find satisfaction, even when other alternatives try to break through. For Buffett, this resilience is a major advantage. When a product maintains its popularity and generates a steady sales flow, the stock can offer both continuous growth and a source of recurring dividends. Buffett's philosophy includes the concept of a margin of safety. He waits for the right moment to buy when the valuation seems advantageous to him compared to long-term growth prospects. At the end of the 1980s, Coca-Cola did not have the same shine as during its golden age, hence a lower stock price. Buffett seized this window to position himself massively. Over time, the brand regained its greatness, and the stock price eventually reflected this positive momentum. The cumulative gains speak for themselves and validate Buffett's strategy. Buffett's example with Coca-Cola shows that investing is not limited to raw numbers. It involves understanding a company's dynamics, its reputation, and its relationship with the public. When you identify a brand that offers lasting stability, you can bet on it even if the sector evolves. Buffett did not demand immediate returns. He focused on long-term value. This vision allows capturing cumulative effects, particularly reinvested dividends. Overall, consistency and in-depth analysis can make all the difference in this type of investment. Unlike those who speculate on slight movements of courses, Buffett approaches more like a patient investor. He selects brands whose intrinsic value is solid and waits quite simply that the stock price aligns with this reality. Daily fluctuations do not scare him because he sees an opportunity to buy more when the price falls. With Coca-Cola, this mentality has paid off year after year, while some began to doubt in the face of changing tastes. Food sector. Buffett looked over several decades. He prioritizes quality and sustainability, two notions often overlooked by those seeking quick profit. By studying Buffett's example, any investor can gain a valuable lesson. Buy and hold, provided you select the targets well. Coca-Cola represents the archetype of a timeless brand supported by an obviously loyal consumer base. Even if the stock price doesn't skyrocket every quarter, the overall trend remains positive over the long term. This consistency can lead to substantial gains. It is therefore a matter of assessing the true value of a company and waiting long enough to reap the rewards of one's choice. Thus, short-term anxiety is limited and a sustainable vision is cultivated. Before concluding, I would like to invite you to subscribe to the channel and like the video if you found this analysis inspiring. Your support allows me to continue offering content focused on major business figures and proven tactics to advance in these investments. Warren Buffett remains a fascinating example, but he is not unique. Many investors have applied similar logic to other strong companies. The important thing is to understand that consistency, discipline, and thorough research often pay off over time. We're approaching our conclusion. Thank you for watching this video dedicated to Warren Buffett's incredible bet on Coca-Cola. His story proves that a wise investment can turn a simple stock purchase into a true source of long-term wealth. The example of Coca-Cola reminds us of the importance of identifying strong companies, being patient, and appreciating the power of reinvested dividends. I hope these explanations inspire you and give you ideas for your own investments. Remember that every investor must do their own research and stay consistent with their personal strategy. Thank you again for your attention, and see you soon for a new video.